Good day. My name is Frank Basa. I am the President CEO of Granada Gold Mines. Our property is located in Quebec and Canada. It trades under the symbol of GGM on the TSX Venture Exchange.
Frank, hello. How are you? We spoke a few weeks ago with regards to kind of Cobalt Silver Works, obviously. So we thought better get an update with you as to what's going on here. So what is going on here?
Well, there's a lot of activity actually on our property. Some of the stuff basically in the last 3 news releases is what I'd like to cover and what we're trying to accomplish with our program going forward. So our main thing is we've decided that to develop the property as a higher grade open pit, smaller open pit, and then go underground and treat this as an underground mine. Originally, we had this deposit at 1.2 million ounces open pittable, and we felt that after some of our drilling results we've gotten last year that we should probably deal and treat this as a smaller, higher grade open pit. So we took the grade up to 2 grams, and then we put the rest underground. So we basically came out with about 750,000 ounces. That's between the open pit and underground. So the open pit was at 2 grams now, and the underground's at 4 grams. So we're carrying out with a program, a drill program. There's about a 120,000 meter drill program. We've about 30,000 meters done to date. And we also, in the process of doing our drill program, we came across some rare earths and alkaline metals. Now, the grades are quite low, and we have something, though, that's unique combined with the rare earths, is this alkaline metal called rubidium, which seems to have a fairly significant amount in the mineralization that we've intercepted. We only done 2 holes, and actually was part of our drill program trying to hit our gold zone. So this rare earth seems to be sitting on top of our gold zone. So we only checked on 2 holes, and this is between 2 holes about 1.6 kilometers. In one of the holes, which was about 1.7 kilometers deep, we hit mineralized rare earths anywhere from 177 meters to 2 meters. And of course, we have about, I think, 19 combination of rare earths and alkaline metals. But primarily, we're focused on rubidium. Also, we are doing some other test work. We're trying to evaluate if we can make any value out of our waste. Originally, we did some test work on our waste with our people at Gecko. And so what we did was we took a bit of a bulk sample on an area we just drilled. So we took a sample of about 500 tons, and then there's about 900 tons of waste. And we decided to send about 100 kilos of waste to Gecko. And we've worked with them in the past, about 3 years ago. We spent a fair amount of time with them, also in Australia. So we sent them material that's about 0.33 grams per ton, basically waste. And they're able to take this low-grade material and return it to us at about 1.2, 1.3 grams a ton, with about a 47%, 50% recovery. So it's possible to recover gold from the waste. It's economical. So we're going to carry on with that program.
So what's your focus? Because you obviously got the 2 companies going on, right? What's your focus going to be? Can you run both companies concurrently?
Well, we've changed the management at the other company. So we've added a president, and we've also are looking for people to strengthen our board on both companies. We're trying to make a transition from exploration to the next level. We were looking at originally somebody acquiring our assets. We did get a few offers. Actually, we got 3 offers. We felt that it was severely undervalued, so we declined them. This company, when we originally took it over, it was a distressed shell. It was actually halted. And within 18 months, we took it to about 120 million market cap on the drill program alone. So right now, we're trading below 20 million market cap. We have a nice resource. So we feel that in the next cycle, which is coming around, we hope there'll be a strong bull market for golds and silver, and hopefully we get a better value for our investors, or somebody give us a reasonable offer. So we're, like I said, we're looking at going to the next stage. That'll require some changes to our management and our board, and the intent is if it's viable, we will pursue that. So we do have all our permits in place. We got them in the last cycle when the cycle was down. So we are right now able to ship to any mill in the area. As you know, there's quite a few mills in the area, and there's about 4 of them that are shut down due to lack of rock. So we changed the resource. Like I said, originally we had a resource of only 1 gram, so you can't ship 1 gram. So we changed the resource to 2 grams. And of course, once you go underground, it'll be about 4 grams. So that's a shippable grade. Originally we did a study. We did a PEA a few years ago, and for us to build a mill was about $290 million to do, pour about 100,000 ounces a year. But since there's so many mills around, we thought, somebody will probably have an interest and, use us as a shipper for their mill.
Right. So you've seen the highs, you're down on the lows, like say sub 20 million at the moment. I don't know what your cash position is like, and with what cash you have, where do you spend that? Because there's a lot of moving parts. We've talked rare earths, rubidium, we've got obviously gold. I don't know what else is in there, but it's how do you focus the message for the market so they know what it is that you're trying to be?
No, I think the best thing here to focus on is we're just trying to redevelop the resource. Hopefully, this after we do this 120,000 meters of drilling. On the last cycle, we did about 90,000 meters of drilling in 18 months. So, we're hoping, there's a lot of challenges out there with COVID. We still managed to keep on going with our program. We do small financings at these low prices, and hopefully when the market moves up higher, we'll do larger financings. So we've been fortunate that we're able to raise the money to keep the program going. So primarily, we're just right now, we're just exploration. Target is to try to hit about 2.5 million ounces between open pit and underground. And hopefully after, like I indicated, if we able to do that 120,000 meters in a reasonable time frame, we will have a revised resource in that size.
Right. So you've got a lot of shareholders that bought in on the previous story, and we, like you say, you reach those highs. And it's obviously come way off, and you've got to get those guys are still in here. These shareholders, they're underwater. This feels like a news story. Obviously, the 90,000 meters of drilling showed up one type of company, one type of strategy. You're talking the language of higher grade. You're also we're now looking at underground, and you're not building a mine. And it seems you're kind of encumbered by the legacy issues. Do you think the market's going to, be forgiving and give you a chance to actually try to deliver this new strategy? It's
hard to call. At that time when we did the program, we raised a fair amount of money actually in Europe, and a lot of the people that we tapped for money, we actually spent $60 million in the last cycle. Actually, were investors in Osisko, and Osisko is our next door neighbor. They're not far away, and we're also below what they call a Cadillac break. So everybody thinks if it's below the Cadillac break, it's the same geology. So we kind of indicated to our investors at that time in Europe, the geology is different. We did come up with the original resource, an in-situ resource of 2.6 million ounces at 1 gram, which we kind of told the investors, although you might have this resource, the economics are not right because of the nature of the ore body. Anyways, we went through the motions, and I said, we did our PEA, and of course, to build a mill, to do 100,000 ounces a year, came into a little under $300 million. So at that time, the market wanted a large, low-grade open pit. The economics were not there, and so we decided to change the approach to the deposit. So the approach is develop this as a higher-grade open pit. Historically, it was mined underground at 9 to 10 grams a ton. There's a lot of native gold in the deposit. It's about 50% of the deposit is native gold. And then also, I know previous operators had this property, took out bulk samples from surface, over 100,000 tons in the 3.5 to 5 gram range. So what we did was we intentionally diluted the open pit grade to 2 grams. And also the underground grade, we intentionally diluted it down to 4 grams a ton. So we like to be a little conservative. I know the model has changed, but I think this model is more robust than the previous model, trying to develop it as an open pit. The open pit, it's just the economics were not there because the nature of the ore body at the angle it was at had a very high waste ore ratio. I know we went through all kinds of different scenarios, how the blasting panels are supposed to be done, but still, we're trying to achieve a reasonable cost all in per ounce, but the waste to ore ratio was just too high. So we decided.
So how do you take those lessons? How do you take the lessons of the past and apply them to now? How do you take the data of the past, apply them to now? Give people a sense of why this is going to work this time, and at what point they can, or you and they can expect some economics around this to say, okay, we're not going to raise too much money. We're not going to overspend. It's going to be perfect this time. How do you do that?
Well, it's hard to say, if it's going to be perfect. You see, at that time, the market wanted something, and everybody wanted the same thing, large, low grade, and they want another success story like Osisko. So we looked at it. It's exploration. We did our drilling, we did our resource, we did our PEA, and, the model that, the market wanted wasn't there. And, it was a former high-grade producer, and when we looked at it, we used the same drill data, the same 90,000 meters. We just took that numbers and restructured it, restructure the model or repackage the model. And right now, like I said, it looks pretty good. Our results have been coming back on some of the drilling, doing a little better than expected. So we might be able to hit that 2.5 million ounces. We seem to be able to achieve our targets in the past. Timelines get missed because of, for example, right now, and I think everybody can say the same thing, COVID actually did play a little bit of a role in our delays. We got our permits quite late and our drills quite late. We couldn't get our drills till about mid-year last year. And as a result, a lot of the things didn't happen in a timeline we expected it to happen. But we do hit our targets. Like we kind of indicated when we did our first resource in the open pit, we said we around 2.5 million ounces, came back to 2.6. But, like I said, the model, when you did the model and look at the ability to produce an ounce of gold, the costs were not, it was not an economical model. So hopefully, we're going back to what original was, and the old timers had it right. The ideal thing is small open pit, go underground. They've kind of done a lot of work for us. I know there's a lot of workings underground. And, the old days, it is hand stealing. I don't know if a lot of people know what that means, but everything was done by hand. They didn't have, the jack legs that they have today. And, we have some pictures of the underground. It's quite narrow, so they kind of worked on some very narrow width. But they were able to produce a consistently very high grade. And it is what it is. The geology is a narrow vein, high grade. It seems to be going about 5.5 kilometers on our property. We've only explored 2 kilometers of it. So there's still a lot of exploration potential, and we haven't done any very deep drillings. So we brought in a third drill a few months back to do only about 10,000 meters of deep drilling. So we do one hole, then we wedge off it.
So how do you finance all of this? Because, like I say, the headlines look great. But high grade, very high grade gold over big intervals. Nice. There's not a lot of cash in the kitty right now. Are you gonna need to? Well, do you think you're going to get a good reception if you go and try and raise some money in the market to kind of, look at what potential you've got there? Because, like I say, these sorts of grades are quite attractive.
Yeah, it's kind of hard to call. See, in the past, I did used to raise, I would raise $5 or $6 million at low prices. And the market, the people really came hard and hit it. And so I decided to change the model, and we've used this model in the past. So we only raised like $1 million at a time. And, we're fairly lean operators. We don't have offices. We don't have desks and chairs. And the company has always been designed like that from day one. So basically, whatever money we raise goes in the ground. I don't even have a desk or a chair or computer, and none of our people do. And we're actually all contractors for the company. We're designed like that to be, if somebody wants to take us out, we basically give them the keys, we walk away. But I remember some of our investors who invested in Osisko, and this was actually in Zurich, and we're there by the lake, and the guy said, Frank, They'll have to do the same thing Osisko did. It says, what's that? Go into production. Because nobody will give you a fair market value for your asset. And if you remember Osisko, nobody actually believed in them. It was a former mined out asset. It was there was an old town sitting on it. And it was actually, I think they bought it for $50,000. It was out of a bankruptcy. And, Sean Rosen took it from an absolutely worthless property to, I think, about a $4 billion asset. And he was only being taken seriously by the mining community towards the end. They came in towards the end. Nobody came in earlier on. So it happens. Maybe we have the same potential here. Former producer, high grade. It wasn't mined out as well or as much as the Osisko assets. But we have a long strike length. We have 5.5 kilometers. And hopefully we find something significant. It's still early stage. We're being very cautious. We're very careful with our funds. And we've always been very lean. We haven't actually, we don't go out there and spend money on anything. Basically whatever we raise goes right in the ground.
Why did you, Granada Gold, put out an announcement about what Canada Silver Cobalt Works is up to? Why the?
Well, Canada Silver Cobalt has the process. We don't have the process. I know they're kind of in the same family, but the process does not belong to Granada. So Canada Silver Cobalt, CCW, has been done quite a bit of work with their process. Originally, the process was used to produce cobalt sulfate for the battery market, and we did produce product on spec for Sumitomo out of Japan 3 years ago. So the reality is we just want to focus at Granada on gold. We don't want to get into the rare earth space in Granada. So the only thing we looked at here when we look at everything, and it appears the rare earths are not that rare. It appears there are quite a bit of rare earths globally. I think the only thing we might have is a lot of it. Between the two holes that we analyzed is 1.6 kilometers, and one of the deep holes was 1.6, 1.7 kilometers, and we hit multiple zones, I think 21 zones, I think, and the widest one was 177 meters. So when you look at it, it's low grade. We might have to mine this thing anyways. We'll be treating it as waste. We're only interested at Granada into gold. So if CCW wants to do the test work, the only thing they're going to be focusing on is actually rubidium. It appears not everybody has rubidium. Everybody else has the other rare earths. And I'll tell you, a lot of other assets, properties have better, higher grades than we do. We're not interested in competing with them. Let them have their market. But rubidium appears to be not that, how should I say, it is a little rarer than the rare earths. And they also give you a much better price than some of the rare earths that we're looking at. So that's why they're doing it. They're paying the bill. They're evaluating it. We haven't made a decision how the waste is going to be traded. Right now, the waste off the property, we have a long-term contract with a local aggregate supplier. And basically what he does, he pays us a very small amount for the rock. He has his own permits. He crushes that material on site, and he uses it, whatever is required. A lot of this aggregate is actually left oversized. They're going to be using it to put on shorelines. In the future, everybody's worried about global warming and the levels of the waters rising. So he's actually crushed this rock down to, I think, 12 inches, and he's been shipping it off-site to the point he's looking at shipping it all the way to Montreal, which is about 800 kilometers away.
You mentioned a phrase, handing the keys over, right? So is it a case if you're trying to get this to a point where you're going to hand the keys over, are you going to take it forward? What's the board discussing in terms of optionality? Because, if you said you're unsure about what the reception of the market's going to be, do you say, I tell you what, it's better for us we'll farm it out and get free carry on 25, 30% of this thing, and then we don't have the issue around the legacy issues of the past, people's perception of our ability to get this over the line, right? And you can focus on Cobalt Silver Works, right? So what are the discussions that are going on there in terms of optionality?
See, the ideal thing here, Matthew, is if somebody comes and gives us paper for paper at a reasonable price, we're good with that, because we designed this asset to be taken over, and we did get the permits to be a shipper. And, the permits themselves, I think it's 26 permits. To build a mill in Quebec is apparently 350 permits. So, but, the reality is, even people in Ontario, which is a province next to Quebec, there's a couple of mills there that are shut down. There's also mills running at 30% capacity. So our door is open, give us a fair price. And I think the shareholders will be very happy with that. And the other thing is a structure for the shareholders. They know I'm very good at giving dividends. Last time I gave out dividends, depending how you look at it, I call it a dynamic dividend. It was a share and warrant and a spin out. We picked up the asset that CCW has for $25,000, and over a 4-year time frame, depending on the price of CCW shares, we gave out between $8 to $16 million in dividends over a 4-year time frame. So the other dividend, the shareholders, should production occur, they're entitled to a 3% NSR. Actually, we call it title to the metal. So in other words, they can get metal, gold, if they can receive the gold, or currency of kind. So in the event we hit that 2 to 3 million ounces, they're entitled to 3% of that over the life of the mine. So, we were designed to be just what I call exploration people. We put together difficult assets, and we take over distressed shells. We have a bit of a track record of being quite successful. We did it to this company. We did it to CCW. This company also managed to ruin it. That will happen under my watch. So, hopefully I do what I do best, and I fix what we've done wrong with our company at Granada.
But when do you have to make that decision about which route? There's a fork in the road coming up. When do you have to make that decision?
Well, right now we're talking to 2 potential operators in the area. We leave it up to them. They're actually on our property. And we leave the door open. We're flexible, whatever they need, whatever they want to do. But give the shareholders a reasonable value for the investment. Like I myself have a fair amount of money in the company. I usually buy all the private placements. For me to break even is 32 cents. I got 2.8 million. You'll notice I also own a lot of the debt. When the companies were quite down, we didn't decide to dilute the company by buying these really cheap private placements. So I believe in the asset. I really like to get my money back. I'm known as a long-term holder, and so far, we've always done quite well over the long time frame. We ride out the cycles, and if we can, we do the best we can for our shareholders.
But is it possible for you to spin out one or more assets into another vehicle that you own, give it a better chance of success?
Well, everything's possible. Like we're looking at multiple things here. I know this sounds a little odd, but the back of the envelope calculation for a rare earth, even if I hit 3 million ounces, the rare earths are worth more than 3 million ounces in gold. Even at the worst pricing for the rare earths and the rubidium. So, we have a lot of numbers, but normally on the rare earths, we send it to more than one lab, the same sample, just to confirm that it makes sense. Rubidium really shows up. Like on one of our news releases, we put out some values, but we didn't want to include rubidium in the gold equivalent. So we only did the lower value rare earths, and you got anywhere from 2 to 4 grams a ton gold equivalent, but you would have it over 177 meters. And we don't have that now. The best thing we might have is probably, let's say on the average, 8 meters, 10 meters of 4 grams. We have some crazy numbers, but that's a nugget effect. So when you look at the back of the envelope, and some of especially my American investors, they got all excited about the rare earths. I said it's not that rare. Anyways, I gave it a number figure, but when you look at it, and if it is what it is, the real value to the property is a rare earth. But rare earth is not an easy. Rare earth is a big boys game, I think, in reality.
It can be. So if I'm a new investor looking in, why should I even contemplate investing in you?
Well, I think if we carry on with our drill program, we get successful. If we do hit our targets, of course, we become a little more desirable to be taken over. We feel we'll end up being a multi-million ounce deposit. If we hit the 2 to 3 million ounces, I think it's possible to hit that. It seems to be everybody else on the Cadillac break seems to be able to hit it. We did have 2.6 million originally in situ when we first did our resource. And then, of course, we took it down to 1.2. We got a pit constraint resource. But the economics weren't there, like I said. And now we're down to about 750. We cut it down a little more. What we're trying to do is develop a very robust resource. Whoever wants to come in, we don't see the value of building a mill on site for 300 million. If, for example, IAMGOLD, their mill is running at reduced capacity to 40 kilometers away. Why, and IAMGOLD's been on our property. They spent 9 months on our property. So, they're one of the potential people that might find this asset of some value. And if you look in the last few months, a lot of these assets, Monarch was taken out for 130, 160 million. QMX was taken out by, for 130 million. I think they're taken out by Eldorado. Monarch was taken out by Yamana Agnico Group. So a lot of these properties are on the Cadillac break in Quebec, real estate is really, really, really tight. But as far as I know, we're the only property on the Cadillac break that is fully permitted to be a shipper. In other words, if you want to ship the rock, you can ship it within 2 weeks.
Brian, appreciate your time today. Thanks for the update. Stay in touch. Let us know how you get on with some of the activity and, more importantly, some of the decision making that you've got to, presumably before the end of this year, you're going to kind of work out how you want to approach this for the benefit of your shareholders. Okay.
Okay. Thank you very much.